I was going to say hello everyone, and welcome to my weekly analysis that I do. It is Sunday the 26th of July, and it is 5:45 in the evening. And I'm going to redo my format because we've got some significant kind of historical events heading our way, and I think that it's important to include them as a portion in these videos, at least until the 3rd of November or just shortly after. So first of all, I want to have a look at what's going on in terms of economic calendar news. So in case you get the impression that I'm 100% technical, which is actually the case, I am 100% technical. At the same time, I do keep an eye out for potentially market disrupting events, which are usually included on the economic calendar. And obviously, like a normal human being or an adult, I do like to keep track of what's going on in the news. So first of all, this week, I've timed this as time to my local clock here in the UK in London, and I'm having a look. So I've got core durable goods. I'm focusing mainly on high impact news and really having a look at what's expected this coming week. So really the ones I'm going to be concerned with for the most part will be FOMC on Wednesday, the Fed's interest rate decision. All right, so this is tied very much to the US economy and what they're intending to do with regards to stimulus packages, as well as perhaps interest rate decisions and so on. So this could likely have an impact on the markets as well as on the value of the dollar. So I want to be aware of those. That's really going to be my primary concern. I expect more unemployment. There are at least 60 high street brands that have closed down since quarantine, so that will have an impact. So I do anticipate continued, although some people will be going back to their offices and some companies are hiring, for the most part I anticipate that we will continue to see more and more unemployment as time goes on. So that's a reasonable expectation, and I think that that's factored in already. So looking at various values, the one I'm really going to be focusing on is the US dollar. And so these are the key things this week. So next up, I want to, and I apologize for the very raw format, the way in which I'm doing it through browsers as opposed to putting together an amazingly polished presentation for you, which I had considered. I think that I'll start by doing this. So we have 99 days until the US presidential election. So now if you are living in South Africa, you're living in the UK, you're living in Australia, you're living in Europe, possibly you're wondering why this is relevant to us. Well, this is what I'm here to explain, why the US election, 99 days away, is going to have a significant impact on the markets. And so I'm going to continue to keep an eye on this as we go closer to that particular period. And so I want to explain why that is the case. So first of all, for those of you who are not familiar with why this is the case, you need to be aware that around 90% of Forex trading involves the US dollar. The dollar is just one of the world's 185 currencies. So out of 185 currencies, 90% of those Forex trading transactions usually involve the US dollar. All right, so be aware that that it is a major cog in the system. Even if we are not trading it actively, it is in the background and is constantly, it's the biggest kid in the playground and is constantly pushing other things out of the way. Next up is to draw your attention to the US dollar index, of which the euro is the single biggest trading partner. These numbers vary year on year, but let's keep it as it is for now. We have the euro, which is about, let's call it 58% of the transactions, followed by the yen, the pound, sterling, Canadian dollar, Swedish krona, the Swiss franc, and so on. So all of these make up the biggest kind of currencies traded against the US dollar by proportion, or at least the US dollar basket is the measurement of the performance of the US dollar against these kind of key currencies. Also, then we have to take into account what is the US GDP. So the numbers vary depending on where you look, but let's start at about 20. I'm going to round it up a bit to about 21 trillion US dollars. Interesting, China is following the closest, right? Which it is closing the gap. You can see here, look at this, from 2000, the gap here, you can see how it started to accelerate and it started to close that gap. And so it sits at about 14 trillion US dollars, at least in terms of GDP. What's interesting is that if you remove China from that, the United States GDP is bigger than the following 8 countries, the next 8 GDPs combined. So just to give you a sense of the absolute scale of that, in the UK we're sitting at about 2.7, 2.9 trillion versus the US's 21. Some of the numbers I look at put it at about 24. So I'm just going to give you the idea here is to demonstrate that how the US economy is relevant to even the most obscure currency and country in the world. The next up is to kind of show you this in terms of share of the global economy. The United States is 23.6 of the global economy compared to, say, the United Kingdom, which is 3.3. China is 15.5 and obviously growing. And imagine that 173 other countries make up 21.2%. Okay, so the next, kind of next 11 to 20 and 6 to 10 is, these are almost combined, almost less than the United States. So that gives you a sense of how the health of their economy has a big impact on us. Okay, which then leads me to the US elections, and this is really kind of the state that it is. 538 gives us a poll of polls, which currently puts Trump at kind of, he's dropped in terms of popularity, he sits about 40.2. He has a solid base in the 30s, so he's unlikely to see that budge. And we could see that effectively it has widened, basically a combination of the handling of the coronavirus, which has made now the US, which is kind of 4 to 5% of the world's population, is heading up towards 30% of the global cases, and is now starting to kind of make efforts so that the point being is that they're kind of the global epicenter for this, and so this is a big factor, combined with civil unrest, which is related to Black Lives Matter, but it's also related to almost police state responses to that, which feels excessive. And so the protests are kind of, it's like a vicious cycle where that's kind of increasing things. So and of course, as the unemployment grows, that dissatisfaction, that civil unrest is going to increase. Next up, having a look here is the Democrats versus the Republicans in terms of a party, in terms of general popularity. This is a good way to glance. At a glance, we can see that the Democrats, at least since May, have increased their gain in terms of popularity. The Republicans have largely stayed flat, but have dropped a little bit on average. So the gap between them has widened, with the Democrats starting to take control of this, and there's an important potential for them to gain control of the US Senate, which then impacts the ability to have bills passed. And this is huge because the US government has got 3 kind of arms. One would be the president, the other is kind of the one that creates the laws, and the other that oversees the laws. And so you've got the 3 different arms of it, and this is 3 branches, and this is very important in order to maintain democracy. And so what's made that quite different is that Trump is the first president in history that's tended to kind of disrupt that process. And so this is why there is this opinion that they're inherent, like if you think of America as an experiment in, can democracy be a successful model for government? This is why there are concerns that it is under attack. And then finally, the latest polls. So these are polls of polls, and what they do is they will show you up to the run-up. You can see here effectively Biden has a point, let's just call it an 8-point lead, give or take, over Trump at the moment. And a big part of that has been, Biden's success has been relatively even killed, but Trump has tended to, he's kind of lost effectively supporters. Now, as I said, there's a core base, which is unlikely to lose, and so that's likely to stay in his favor. And so that's the situation as it is now. There's 2 particular states which are of, there's several that are of interest, but 2 that I want to just include. And then I'm going to go ahead and go across and have a look at the markets. And so I'm going to update this about every couple of weeks, not every single week, because nobody cares about it that much outside the US, but it is important. So I want to show you here, we have Kentucky, and Kentucky is very pro-Trump. And they have Mitch McConnell, who is, I guess, effectively, you could call him the Senate leader at the moment. He has a huge impact he's effectively responsible for the fact that Trump was not impeached ultimately. And so he has been referred to as a puppet master. So I'm not trying to be political here. I'm just kind of trying to update people who are not familiar with the names. And so he is effectively kind of the governor, or not the governor, the representative for Kentucky. And so it's worthwhile knowing that if Trump does, between now over the next 99 days, lose support that not only tells you that the Democrats are likely to win the Senate, because it means that if they, it's not a guarantee, but it does mean that if the Democrats win Kentucky, they're likely to also beat Mitch McConnell at the same time. That's why I'm showing you this. And finally, we want to look at Texas, which is generally for about 3 decades has been pro-Republic. They've been pretty much Republican. They're considered a red state. And what's interesting to show you here is how much Trump support has dwindled, and they now are neck and neck. Now, I think it's still likely that they're going to be Republican, but I wanted to show you that if you think that, kind of Trump is bulletproof, be aware that Texas, which is considered generally to be kind of one of the reddest states of all, is now, if nothing else, reconsidering its position. And it has been Democrats in the past, but just not for about 30 or 40 years. And that's it. So I really want to just bring your attention to that, so that when November comes around, should it go blue, that is what there would be is one single state that is historically generally red, Republican, that would be an indication that the culture of America has started to shift away from that. It's a really good indicator of that. And believe it or not, you're going to see both sides of, both sides of the aisle, the Republicans versus Democrats, come out to vote in droves. Anyway, so here we go. This is what the forecast so far is. Most of them are roughly the same, kind of predicting. For at the moment, he's currently, and this is not a guarantee, by the way. Things will change as we get closer to it. But currently about a 90% chance for Biden to be the next US president, with about 8% chance for that to be Trump. If we go and have a look at, say, betting houses which do this, they're, for example, predicting a 60% chance that Biden is going to be at versus 36% chance that Trump will be the next president. That will get a second term. So really, I guess what we're seeing here is an indication. If we look at the markets now, I can go back to this. If we get a sense of what is the state of it, it's leaning currently, it's looking very much likely that Trump will not get a second term. And what that also means is that the policies will change. And one of the biggest policies that's going to change in the US, which is going to impact all of us, is the wealthy are almost certainly going to see an increase in their taxes. All right, almost certainly, which means that the stimulus packages are also going to change. The stimulus packages are not just going to go to the uber rich, to the 1 or 2%, which is a key factor in, at least in the US indices. All right, so that has been a contributing factor to the movement in the markets. And so that is not really going to be the case. And that will probably get factored in as we get closer, because the voting will actually start around October, because people are going to be voting by mail because of the quarantine. And this is really going to impact as we run up to that. We're going to see an impact on that. So taxes will change. However, there will be stimulus packages, but the money will not just, in this particular case, go to corporations or wealthy individuals. It'll likely start to spread its way around because of the different policies. And so, because the goal of that will be actually economic recovery, as opposed to money going to the top and not trickling down. The goal is to make sure that it's distributed at least to the middle and to where it's needed, and obviously to make sure that if by then they haven't got the coronavirus under control, that they will shortly after start to get it under control. So there we go. So I apologize, that was 13 minutes of stuff you might not have been interested in, and I will make a note of that at the beginning if you want to skip to this point. So let's have a look and go and have a look at the US dollar basket, and let's see what's going on in this. So I've highlighted the monthly chart really because you can see here that we've had some strong support in this area. Also, if we drop down below and we kind of highlight this area, we can see that there's a little bit around 93. So we're sitting at 94.50 and 93 for that as potential support. There were strong rejections in this area, and prices dropped and closed below that level. It doesn't mean the game is over, because we've had that happen here in the past. It could still come back up and stay above this level, but I think that as we start to head towards November, and it now starts to look almost guaranteed that it's not going to be Trump. In other words, now the market has an idea of what's going to happen as opposed to uncertainty. I think this could add to that factor as we start to leave that range. You can see the trend as well, very nice. Look at the quality of the price action on the daily, beautiful, very stable. It is overextended, it is away from the moving averages. You can see the weekly candle's a really big candle as well. It's broken through that clear support. There is another level here, a little bit towards 93.50, call it 93.50, and I think it's reasonable to expect price to probably take a bit of a recovery once it gets to that level. So going across and having a look. So in other words, although it is overextended, and I do expect a retracement at some point, which means that during the week there would be a stronger US dollar for a period of time, I think that it's going to attempt to continue down towards 93, 93.50 first before it does that. Let's have a look at euro dollar. So euro dollar has now beautifully broken through 1.14. It is overextended now, but the really next most significant level, it's broken through any local ones, is up here towards 1.18. So I kind of, at the moment, I'm really expecting it to attempt to hit up to connect with 1.18 first. And then I expect it to kind of take a bit of a breather. And this would have a roughly inverse correlation with the US dollar index. So at least, so this is it. So there's two potential outcomes for me this week. Is one, it takes a retracement immediately, Monday or Tuesday, and then carries on up till Friday, or potentially it attempts to go straight up throughout the week and then takes a bit of a pullback. So in principle, I'm bullish on this. I would rather be buying the euro over the dollar than selling it for the week for the most part. Looking at sterling against that US dollar, it's coming up into local resistance, so we'll have to see how it fares, but it is in a weekly uptrend, which is great. And you can also see, if you look here at the monthly, or at least what I see, a nice strong rejection of these levels at 1.2, and I really want to see it break above the 1.3 level. Living in the UK and being, obviously having grown up in South Africa with a weaker currency, I would really like to be, I enjoy being part of a country with a stronger currency, and I don't want to see it weaken here, and that's obviously just my baggage. So I'd like to see it break up here and start to strengthen, and so for me that's kind of what I'll be looking for, but not necessarily this week. This could be something that happens over a couple of months, and we'll see if that's the case. Aussie dollar against the US dollar, beautiful. It's broken through. It's hit the next level here from last week. It's pulling back. This is a very nice potential buy opportunity. So taking everything into account, a weaker US dollar, a strong Australian dollar, this kind of a pullback here for a nice bullish candle. If it can then find support and then carry on, that is an actual trading opportunity for me that I'll keep an eye on. And once it breaks through that, it's got quite a bit of room to go up towards 0.75. It's got some nice room to grow. And then Kiwi dollar as well, similar thing, breaking through, coming back to these areas, looking for support. So these are, for me, will be actual trades. And if I do take them live, I'll make a recording of those and make it available to you. Dollar yen. So dollar yen, as I always kind of bust its balls, is within this range, and I expect it to creep down very slowly. Look at the moving averages here. The flow of price, very slowly but surely, is heading lower. Now, both dollar Swissy and dollar yen historically tend, if you look back, they often tend to strengthen. So the fact that both dollar Swissy and dollar yen now are kind of strengthening against the US dollar could be potentially seeing them as some kind of safe haven option. But generally speaking, as the weaker US dollar, dollar yen is going to really, they prefer to keep theirs within a range. So of the two, I anticipate dollar yen will keep pushing back up. So I'd be surprised if it broke out solid and continued to trend. I think that the Japanese central bank will make every effort to keep this back up within this range. And that's what they'll likely do, at least until trade policies have kind of locked themselves down. Dollar Swissy, on the other hand, is a bit of a tricky one. I anticipate absolutely this is going to continue to trend lower, but I would keep an eye on the SNB, the Swiss National Bank, because I anticipate that they will not like this. They've intervened in the past, they've intervened here, they depegged here and they intervened here. They really generally are not, do not want it to go below a certain level, and we're starting to enter that territory again. So I anticipate that they will, I'll be wary of what they say in the news. Do they start talking about intervention or changing policies to keep this pushed above? But generally speaking, unless they just decide this time around to just let it play out, I would be very wary of key levels here, because I would expect bounces off those levels, and I'll keep an ear on the news. So we are overextended. A retracement this week would make sense. In the longer term, I anticipate that weaker US dollar for now. There are no signs that it's going to change trend. So a retracement, but generally speaking, I'm looking for that US dollar to weaken and continue to weaken throughout the next 4 or 5 days. Thank you very much for your patience. And yep, that's it on currencies for now.